we're going to move from a panel to a keynote. We're going to bring back on stage Konstantin, co-founder of Paybis and co-host of today. So thank you.
So, hello guys, I'm Konstantin, I'm a co-founder of Paybis, and today we're gonna talk about the hyped thing everybody talks about, stablecoins. So I will try to explain our view as a company, how we are riding this hype. Is it really hype or not? Let's dive in. Let's start with some interesting numbers. We all heard the number, potentially you heard the number of 35 trillion of USD moved through stablecoins last year. Is it really so, or is it misleading? I think it's actually noise. A lot of payments there, a lot of volume is just money movements without actual real life use case. From the real life use case, we see, and it's proven based on the McKinsey and Artemis report, that about 390 billion last year were done in payments through stablecoin, which is just 2 basis points of all global payments. Is it like a rounding error? I mean, what's happening? The interesting thing is that this number had doubled during last year comparing to previous one. And additional interesting number is that 4.5 billion US dollar went through Visa crypto debit cards last year. So people are spending their stablecoins and and using them for payments through the Visa card. Where are we going with these numbers to, right? Based on the current projection and based on the current reports from Big Four, we think that in 9 years from now, by 2035, the number could reach 50 trillion a year in payments done using stablecoin. So is it really hype or not? We see the same shift happening inside our company. We are in crypto since 2014. We started as a retail crypto wallet for new customers going from Web 2 to Web 3, buying their first Bitcoin. Then we started serving businesses. And in the last, let's say, decade, last 10 years, the Bitcoin was always number one. Almost every second new retail customer that came to us, and we have now like more than 7 million retail customers on our platform, the first purchase was Bitcoin. This has changed dramatically during the last couple of years, right? From 12% of our trading volume, our on-ramping volume, so to say, in July 2023, this number increased to 86%. So 86% of all the volume what we're doing right now are stablecoins. Retail customers, businesses are mainly interested in stablecoins. So we see the shift from inside already happening right now. And then we are also trying to understand where the industry is going to. Is the information there? We saw this panel that the information is out there. And many business leaders already understand how stablecoin works, but there is still a gap. We did a survey of 1,000 European business leaders, and still 1 of 5 of them thinks that stablecoin transfer takes a day. Everybody has a background from traditional finance. For many people, it's still not obvious that the time to move money and the network to move money can be switched from traditional banking payment rails like SWIFT, SEPA, and multiple local rails to blockchain. It's basically money over internet, right? It takes seconds to move money now. Then a lot of people still think, 33%, that it is very expensive to transact in stablecoin, that it could take you up to 3% to move your fiat money to stablecoin, which is these days completely not true. It costs a couple of basis points. And the interesting fact is that 40% of people who we surveyed are either already planning to adopt stablecoin in their businesses or considering it. Where does the regulation fit into it? I always talk about regulation, that it is good for crypto. Well, a lot of people, especially from Web 3, always like objected me for this, saying like regulations steal our privacy, they are making life hard for businesses, they are kind of making everything exposed. I mean, you know, the crypto maxi guys want, as we also discussed today, want privacy. But you know, regulation is what actually helped crypto adoption. Remember, like 5 years ago, if you were in the crypto industry, like PayPal did not touch crypto. In US, companies could not invest in crypto. It has changed in the last couple of years. With the ETFs in US, you know, even government pension funds are using Bitcoin now to basically move some money and invest. And with the MiCA licenses in Europe, that now, for example, from 1st of July, every company has to be licensed, it also helps consumers and businesses to make sure that they are getting the service they are expecting, right? Because regulation is not just about making life difficult for the businesses. It's mainly about to make sure that the business that you interact with adheres to specific rules, processes, guidelines to make sure that your money is kept safe, your money is secure, and you're getting the service, right? We trust banking system for decades. Now it's time to start trusting crypto companies and, you know, all the fintechs which adopt it at the same level of trust, right? That you will get what you expect and you have your rights protected. So for us, this is also kind of a proof that what we're doing makes sense. We also got one of several companies, or several tens of companies in Europe who got MiCA and PI license recently. And this is a proof that what we are doing is considered the right thing to do from the regulator perspective. Let's talk about what Paybis can do for adoption of stablecoins, right? And if this hype will continue. So what we help banks, right? We help banks with getting legal access to crypto, because we talked today that okay, a lot of banks have problems with infrastructure. We solve that part. We solve the infrastructure part, we solve the licensing part, we solve the liquidity part. MEIs and payment institutions, a lot of them, I mean, they are more nimble and they are more maybe technologically advanced than old school banks. They are adopting crypto already. A lot of MEIs are now integrating different, let's say, rails, including ours, to make sure that their customers can get access to stablecoin. Because, you know, medium, small businesses or even large businesses, they will not go and mint with Circle or Tether. I mean, they are not too, they don't have enough capacity to get onboarded. It can take you like 6 months to get onboarded with Circle, but you need, for example, you want to adopt stablecoins now to try it out for payments, because you'll start seeing in your environment that more businesses around in your ecosystem can accept stablecoins or can get paid in stablecoins. So businesses want to try and move money through a new, let's say, payment rail. Brokers, like there are a lot of companies which are entering the business and trying to do brokerage, right? And they need compliant fiat rails and infrastructure, because getting your own license is very complicated and it's very costly. And also, I mean, we mentioned neobanks, right? That neobanks are emerging and they are trying to take the piece of the pie of the revenue of the traditional banks, and we help them with that as well. So I will talk about a couple of use cases that we see are on demand right now, that we are helping our customers with, and I mean, there are a lot of discussions around these use cases. So first use case is for card acquirers and PSPs. So the card payment and in general, the payment industry, right? There are a lot of different payment methods around the world, a lot of local payment methods, you know, a lot of card acquirers and PSPs. All of them are now trying to figure out how they can settle their merchants in crypto. Because merchants which sell goods or services understand that they can get settlements not through the bank accounts, not through, let's say, traditional rails where it takes a day or two or more, where you have weekends, where you have bank holidays, where basically, you know, you have cutoff times, but they understand that they can get settled instantly, 24/7, right? So more and more companies are asking their PSPs and card acquirers, can we get settled in stablecoin? And this is what we're helping them to do. And the interesting thing that we found a way how to do it without complex integration, without changing the agreements between the companies, because, you know, If you are an acquirer and you have multiple PSPs or merchants, you have contracts in place. You have integrations in place. Everything is in place. And to change that, that's what we also heard from the traditional banks, it takes a lot of effort from technical standpoint, from compliance standpoint. So we found a way how acquirers can and PSPs can settle their merchants without additional agreements, without any integration. We open the VIBAN for the merchant. Acquirer settles, continue to settle fiat into that IBAN. We try to make sure that this IBAN is as close as possible to the same bank as possible, so the transfers are almost instant, especially in Europe with instant SEPA. And the funds which come in, they're getting converted automatically into stablecoin. So the end result that the merchant or the PSP or whoever is in between can get settled in stablecoins very quickly, and they can basically get the result they want without changing the integration, without signing additional contracts. As simple as that. Next, what we are doing, or what we see where the demand is coming from the neobanks. So especially, I think it started already last year. A lot of neobanks, especially more, let's say, who have their risk appetite higher, or maybe who has more trend to ride the stablecoin hype, they approached us and asked, okay guys, can you help us to make it possible for our business customers on our platforms to get access to stablecoins? And one of our products, actually a couple of our products, fit perfectly into that use case. So basically the banks can integrate our solution. It's either API solution, if they want to build the full UI UX themselves and make it easy for their customers to stay within their platform, or they can use our SDK and get UI UX out of the box. So depending on the technology platform that banks are using, some of them are doing their own stuff in-house, some of them are using software as a services. It's always a matter of prioritization and allocating the right resources. So we try to make this integration also as simple as possible, so the customers can stay within their existing bank applications or mobile apps, and still they can get access to crypto. At the same time, that the banks don't have to, or neobanks don't have to touch the crypto themselves, so they don't have to go and buy liquidity using their own funds. They don't have to, let's say, worry about the compliance, because we would take all the compliance and transaction monitoring, QIB and everything on our side, again, according to local regulations in Europe, US, or Canada, the licenses that we have. So we take this burden from them, right? So they can, in an easy way, give access to their customers to crypto, but at the same time, without additional costs, without additional complexity, without additional resources. So this works already in Web3 industry for us for many years, and now we are bringing the same product to the neobanks. And then the most primitive product out of all of this is our Paybis business accounts, right? So it's meant for any company out there, regulated or unregulated, doesn't matter. They can open, or you can open a business account with us. You can get your fiat rails set up. You can get your crypto wallet set up, so you can keep custody with fiat through our banking partner. You can keep custody of crypto through us as a custodian, and you can easily convert fiat to crypto on our platform, right? So it's a great product to try our solution. If you're a small, medium enterprise, even if you're a large enterprise, you can see how it works through our UI UX, and basically you can build the same for your clients. This is our kind of mission, right? We do this ourselves for our customers, and we encourage our partners, neobanks and fintechs, to do the same for their customers using our infrastructure as a service. So, is this really a hype, or the shift is coming? I believe that the shift isn't coming, it's already here. We are at the very early stage. If the predictions of McKinsey and everybody is in this industry are correct, and based on what we see that the, let's say, volumes of stablecoins are growing dramatically in the last couple of years, and we see a lot of demand, even on this conference, from businesses who wants to start using stablecoins as alternative to, let's say, traditional payment rails, I think we are on the way to hit 50 trillion in payments through stablecoins in 9 years from now. This is just a prediction, we will see. So, again, I'm here during today, we are with the team here during tomorrow. If you have some challenges like that, you have plans to adopt stablecoins, or you just want to talk about it, find us. We're here and we are ready to talk stablecoins. Thank you very much.